Good morning, everyone. A very warm welcome from I2. I trust that everybody yesterday received lots of chocolates and lots of love and ready to take the week on. Last week, we had a very interesting session on products liability, and today we will be focusing on one of South Africa's growing sports, namely commercial crime. Before I start, I just want to advise that all questions need to be posted on the chat box. We will try and answer all of them at the end of the session. If we run out of time, if the whistle blows before then, we will make sure that all answers are provided to you in written format after the session. Also, if anyone has topics or suggestions on what and how we as I2 can improve and aspects you want us to address from a claims perspective, please send me or anyone in my team a mail so we can address those in the near future. Then it gives me great pleasure to introduce our panelists. First is Attorney Lisa Swain from Webber Wentzel Attorneys. Now, to most of us, Lisa don't need any introduction, but for those who don't know her, Lisa is a partner at Webber Wentzel Attorneys and has extensive experience in all aspects of insurance and reinsurance, amongst other things. Lisa has represented insurers, underwriters, underwriting managers like ourselves, brokers and insureds, both locally and internationally over the last 20 years at least. Our other panelist is Stephen Bell. Stephen is the operations and director and co-owner of African Frontier Risks. Stephen has been doing criminal investigations for the last, apologies, let me just get my focus right here. Stephen has been doing criminal investigations for almost 28 years, and for the last 20 years or so, he's been focusing on commercial crime and related matters. Now, Lisa and Stephen is without a doubt experts in their respective fields, and I would encourage all to visit their websites, their company websites, to get a proper understanding of everything that they can do and can assist you as the brokers and also your clients. Our I2 panelist first is Alexander Pardee. Now, Alexander, it's Alexander's birthday today, so Alexander, congratulations. We pray you'll have an awesome day and a year to come. Alexander has an LLB degree, and he started with us in 2018, I think, when we poached him from Stephen's business back in the day. Our second panelist from I2 is Sipamandla Magubane. Sipa is, like me, part of the furniture. He started with the Hollard Group in 2009. Sipa is currently in the last stretches of his LLB degree, and he's also our product custodian for commercial crime. And I suppose the majority would know me, so I'm Billy Jansen van Rensburg, and I'm looking after the claims division for I2, and has been with the group for almost 13 years. All right, now moving on to the discussion. Firstly, we are not going to discuss any aspect with regards to third-party computer fraud. I think this insurance clause merits a session on its own, and we will later in the year have a discussion of the third-party computer fraud section together with the cyber liability and how these two covers ultimately dovetail each other to give comprehensive cover to your clients. So we're not going to discuss anything with regards to that section. To those who are totally unfamiliar with commercial crime cover, commercial crime cover is essentially a first-party policy that covers the insured for a direct financial loss suffered by the insured, either as a result of employee theft or a more complicated one, employee fraud and dishonesty, with the intent to cause the insured loss. Now, commercial crime in itself are probably the most emotional type of insurance claim that we've been dealing with over the last couple of years. It naturally gravitates to being contentious from an insured's perspective for more than one reasons. With us, and trust me, we as I2, we want to pay valid claims. And with us, all insurers, brokers, and insureds, with us identifying and understanding these contentious aspects and when it can arise, it will only help us to get to the right result at the end of the claim. So without me going into more detail, I'm handing over to Sipho Mondla to go through the first claims example up for discussion. Sipho, thank you. Take it away.
Thanks, Willie, and good morning, everyone, and welcome. I hope we're gonna have lots of takeaways from this talk today. The first scenario that we're dealing with today has to do with onus of proof, intent versus negligence. Although the example may look pretty simple on the face of it, 9 out of 10 times it is a contentious claim. Jumping straight into it, the scenario has to do with the stock worth 7.5 million rand, which was found missing during an independent stock count. And the last independent stock count was found to have been conducted more than 2 years ago. During that period, the store manager was found to have been manipulating the stock records only to conceal the shortages. And with the investigations having been conducted, no evidence of employee theft in terms of stock was found or presented. In fact, the store manager, together with the employees at the branch, were dismissed on no other grounds but negligence. With this example, I'd like to quickly ask Lisa just to touch on the issues which there are a number that we have identified, but the most important one, which I'd like Lisa to touch on, is basically to comment on onus of proof and what it means.
Thank you, Sipho. So what one must always remember with a commercial crime claim is that the insured bears the onus of proving its loss. So the insured, in terms of the policy, needs to notify the insurer of a potential claim or a loss that's been suffered. But very importantly, the insured has got to know and remember that it bears the onus of proving its claim. It's not for the insurer or the adjuster or the investigator to do it for the insured. So the onus of proof in relation to the policy is that the insured must really prove that on a balance of probabilities, its employees caused the loss. And to get into the policy, it needs to prove that either the employees stole the stock or fraudulently or through dishonest actions caused the loss due to the stock theft or the stock having been removed from the insured's premises. And the fraud is in the manipulation of the stock records. And then the most important thing is proving the loss. Yes, I too will appoint Stephen Bell or another investigator or an adjuster to investigate the circumstances of the loss and to investigate the quantum of the loss. That doesn't mean that the insured is now, that it's not necessary for the insured to do it itself. It's very important that the insured investigates its own loss and the quantum of its loss for two reasons. One, if there's ever a dispute, the insured at least has done its own investigation and has got its own proof. But importantly, in terms of condition 8 of the policy relating to claims, the insured is obliged at its own expense to prove its loss and to prove the quantum of its loss. And it cannot do that through the adjuster or the investigator appointed by the insurer to act on behalf of and report to the insurer. Sipho, have I answered your question?
That's it, Tequila, Sipho.
Oh, sorry. Thanks, Lisa. It definitely does answers my question, and hopefully the brokers' questions as well that they might have on this subject in terms of onus of proof. Stephen, to you, what type of investigation process is followed with following this claims example?
Thanks. Morning to everybody. Just a few pointers to start before I get into the different investigation processes that are followed. So obviously very important to notify insurers of any loss, even if employee involvement hasn't been established as yet. Obviously during investigation process, it often happens that the employee involvement is later established. So obviously late notification could play a role if insurers are notified timelessly. So it's very important that notification. And obviously then a loss adjuster can be appointed. Although, like Lisa says, the insured are required to prove their own loss, loss adjuster can be appointed and we can assist the insured where necessary, and obviously guide the insured in the right direction so that the correct process is followed. And obviously in this scenario A, where a employee has been or a store manager has been implicated in terms of manipulating stock records, it doesn't necessarily mean that the store manager is directly involved with the theft, as in this case maybe. Employees, we found in situations where a store manager or warehouse manager has been hiding losses for various reasons. It might be for, you know, he may obviously face disciplinary processes or dismissal process or face dismissal. Various other reasons, maybe liability, and the employer wants to do it. Sometimes we find the employer is doing an investigation on his own to try and identify where the stock discrepancy is. Maybe he thinks it's an admin glitch or error. And in the background, the theft is taking place and the stock losses are just escalating. So obviously in that scenario, the employee might not be directly linked to the theft, although there might be employee theft taking place. Okay. So in terms of the investigation process that must be followed, or that we usually follow, where stock losses are found, especially when there's unidentified or unexplained stock losses, we identify all role players in the whole stock and inventory management process. This will include suppliers that deliver stock, the vehicles, the drivers, the whole receiving of stock process. The stock system is interrogated in detail to make sure that stock that is received is actually loaded onto the system. The whole sales process is interrogated, the dispatch and delivery process, as well as the whole security process. So all those processes in the whole system is important to be interrogated and reviewed, and all the employees related to those areas go through quite an intense interview process. Most warehousing scenarios or environments have CCTV footage. Obviously the footage is important to obtain. Depends, some companies have 3 months, 6 months, depends. The more the better, obviously. So the CCTV footage is scrutinized to identify possible perpetrators. And then obviously a detailed review of the entire stock system and process. Okay, the stock system investigation should then start to identify weaknesses in the system, where potential theft was taking place, if drivers were involved, etc. Unexplained losses are usually due to pilferage and stock or syndicated theft. Sometimes, or very often, drivers are brought into the syndicate, into the mix where extra stock has been loaded onto vehicles. So this entire process of interviewing these employees, sometimes a polygraph examination where it's necessary or required, is brought in, and a whole polygraph process takes place. Obviously, the employees have to consent to this. Where employees don't consent to it, it often happens, then you start interrogating. So there's lots of investigation and interview process that takes place during the investigation process. in a scenario in a warehousing environment where trucks or vehicles or transport vehicles are transporting vehicles, there's usually tracking records that are scrutinized. There is cell phone records, bank accounts. So a whole lifestyle audit takes place to identify potential perpetrators, which include, lifestyle monitoring, which usually if an employee comes with new clothes, new vehicle, a new jewelry, watches, etc., it's the indication that someone has come into money. So anyway, all those avenues are investigated. And then where extra investigation needs to be done, then and again, the insured are very often involved with these investigation processes, but we involve ourselves where necessary as well when we've been appointed. And that is visiting scrap dealers, all outlets where that type of stock could be stolen, we investigate. So it's a very intensive and broad investigation that takes place. And then obviously once the polygraph results are in, if that has been done, there's additional investigation and interviews regarding employee information received from employees, omissions made, etc., etc. And then it's obviously important to register a criminal case, but that I'll discuss a bit later as well later in the discussions. But through this process, we can obviously subpoena privileged information in terms of cell phone records, bank accounts where necessary, and then you start to identify perpetrators. So that is basically, there's obviously a lot more to the investigation process, but in brief, that's the process that we follow.
All right, thanks, Steve. I'm not sure whether Alex, do you have a question for maybe Steve or Lisa?
Yeah, Stephen, just back to you again. Based on the facts of this scenario, it's clear that the insured were unable to prove their loss. So in your view, what would generally assist the insured in proving its claim?
So, Alex, basically, I think through the investigation process, obviously an independent stock take process needs to take place to confirm that these are the losses that have been declared are actually the true losses. And then the entire investigation process, just the whole interview process, the stock interrogation process, and the investigation process then should identify the timeline of when the theft was taking place or has taken place, and segregation of duty. So you just investigate the entire process used within that specific business to identify that should be able to assist the insured in the process.
Okay.
Thanks, Stephen.
Yeah.
Lisa, turning to intent, in this example, it's evident that the store manager never had the intent for the insured to suffer a loss. And that intent is always contentious. Can you explain, try to explain what the policy requirement is in terms of intent versus negligence?
So with the dishonesty, employee dishonesty defined event, the required intention is to cause the insured a loss. With employee theft, there isn't that same requirement. However, when you steal something, you intentionally deprive the owner of that property of that property. So going to the employee fraud and dishonesty, the intent to cause the insured a loss, that intention, there are various types of intent. In criminal law, there's direct intention, indirect intention, and what we all know, and Oscar Pistorius knows very well, dolus eventualis. So usually an employee's direct intention is to take monetary benefit for him or herself, to benefit from the fraud. The dolus eventualis is what is sufficient in this case, where an insured realizes or knows that he or she is stealing the property of his or her employer, and whilst directly intends to benefit him or herself, the employee objectively foresees the indirect consequences of the fraud. In other words, what the likely outcome of his or her dishonest actions or fraud will be, and that is loss to his or her employer. And then with that awareness, that foresight, the employer thinks, well, screw it, my gambling debts are so big that I have no choice, I'm going to steal anyway. That dolus eventualis is intent sufficient to satisfy the intent to cause an insured loss under the policy, because you know in the back of your mind that you are stealing your employer's property. If you steal your employer's property, you can reasonably foresee that your employer is going to suffer loss. So that is sufficient intent for the policy. So intention is quite easy to ascertain. When it's more difficult is in a scenario when what is being stolen is a third party's property or funds belonging to a third party for which the insured is responsible. And as you know, that is part of the definition of loss. The loss covers loss of property belonging to the insured or for which the insured is responsible. So for example, in Stephen's warehouse example, if I am the owner of a warehouse and I store stock on behalf of my customers, I'm responsible for safeguarding that stock. So if one of my employees, through fraud or dishonesty, steals that stock belonging to somebody else, that the proof of dolus eventualis becomes a little bit more difficult. Yes, in that example, the employee knows the stock belongs to Willie Janssen van Rensburg. Does the employee know that Lisa Swain, the insured, is responsible for that stock? And therefore, when that stock is stolen or lost, does that employee objectively foresee that the loss will be mine because I'm responsible for it? As you can see, that intent becomes less easy to prove. And when employees are not aware that, for example, monetary funds are within the control or are the responsibility of the insured, then that intent is difficult to prove, because the employee's direct intention is to benefit him or herself. Indirectly, does that employee know that Lisa Swain, the insured, actually is responsible for these funds that are being stolen or misappropriated? If not, then the indirect intention or the dolus eventualis is very difficult to prove.
Thank you, Lisa. It certainly does get complicated sometimes. Alex, would you mind to go through the second example?
Okay, thanks, Willie. So our second scenario will deal with direct financial loss versus legal liability. So in this scenario, the insured provided credit via its vending machines to vendors once their deposits had been received and allocated. Employees fraudulently transferred money from the insured's unallocated cash account, which was never claimed by the vendors. Unclaimed money in this unallocated account was written into profit by the insured after a period of 3 years. The insured argued that it had suffered a direct financial loss because the employees had stolen the money. The contract between the parties, however, clearly showed that the insured was not responsible for the money prior to the theft. Stephen, maybe just before we move to Lisa, to explain what the difference is between direct financial loss and legal liability, can you just briefly comment on what an insured should do when they uncover theft or fraud?
Okay, so basically, as discussed in the first scenario, it's always very important to notify the insurers immediately after discovery, even if the scope of the loss or the quantum of the loss hasn't been established yet. If a theft has been established, notifications first and vital. It sometimes happens that, and just a bit of background, it sometimes happens that an employee will admit to the theft, and agreements are made in the background between the employee and the company that they'll pay back the money, and agreements are reached, contracts signed, etc. Notification never takes place. The insured thinks they're going to get their cash back. Obviously, in most situations, we're talking about millions. suspect, the funds are never repaid or the employee defaults, and then the insured obviously want to rely on the policy, and then that late notification might come into effect, as well as various other factors such as prejudicing the claims process, prejudicing the whole recovery process, was a very important aspect that we deal with once we get involved with, once we are appointed and get involved with the claim. It's very important to suspend all suspected employees, obviously to prevent further losses from taking place. Any losses that usually take place after a discovery of the loss usually excluded from a claim. So it's very important to suspend all employees that have been linked to the theft or the fraud. And then obviously vital to start investigating all the fraudulent transactions. Obviously you'll do that by investigating all transactions processed by the implicated employee or employees. And then the time period and the modus operandi is usually established during that process. Very important to also note if recovery is a vital aspect in any claims process, obviously. Notifying the Provident or pension fund administrators is quite important to ensure that the benefits due to that employee is withheld. And Lisa can maybe comment on that as well, but in terms of that Section 37D of the Pension Fund Act, that gives the administrators, obviously allows them to withhold the benefit pending the whole criminal process. And then there's obviously there's a proper process or there's really two scenarios where the pension fund benefit can be recovered or paid back to the insured, and that's if a court order is obtained, or a limit of, or if the Section 37D admission of debt and liability signed voluntarily by the employee. But obviously there's a proper process involved with that, and the employee has to specifically state why and what he's admitting to before administrators will pay that over. And then it's obviously important to, as soon as possible, secure all sources of evidence. That may be in the form of a company laptop, workstation, cell phone, company cell phone, etc. Vital information is usually stored on these devices, especially the laptops. We find that employees create their fictitious invoices stored in a certain, and usually very blatantly on the computers. They're obviously not expecting to be discovered or uncovered their activities. And obviously to register a police case at the appropriate time. And even during this is important because private cell phones and laptops can also be seized. Very often the documents are created on private devices, and through the criminal process, all of these can also be seized. And in fact, also through civil processes, those devices can be seized and secured. Sometimes the insured party elect to appoint a private investigator. Again, they can do this. However, their costs are usually excluded if it's not pre-approved by insurers. And then just a normal investigation and polygraph process to follow thereafter. And I think that's the most important things for the insured to do when a fraud or theft has been uncovered. Okay,
thanks, Stephen. Send over to Sipa.
Lisa, just a continuation of Alex's question, but this one is to you. Often, always, all the time, basically, the commercial crime policy requires that the insured must have suffered a direct financial loss, which is often confused with the insured's legal liability, for example, a PI policy. Can you please shed some light on this, especially with this example?
Sure, Sipa, and funny, I think Kamini has got a crystal ball in front of her because I've just seen a question pop up that is almost exactly what you've just asked me to discuss. Anyway, so yes, so you've also, one's got to understand the differences between the defined event and the definition of loss. So when we talk about direct financial loss, we're talking about the definition of loss in the policy, which is actual and direct financial loss of money, monetary funds, negotiable instruments, or corporeal tangible property belonging to the insured or for which the insured is responsible. As Willie said in his introduction, A commercial crime policy, barring some exceptions, is a first-party loss insurance policy. It covers loss of the insured's property. It does not cover loss to third parties arising out of dishonesty to whom the insured then becomes liable. So to answer Kamini's question, for example, the dishonesty extension in a PI policy is cover for the insured's legal liability to compensate a third party, for example, a customer or a client, for loss caused by dishonesty on the part of the insured's employee. That is not covered under a commercial crime policy. There is, however, the extension to the definition of loss, which kind of brings some of that liability in, and that is loss for which the insured is responsible. Because the insured is responsible for the property or the funds, as I said earlier in the warehouse example, it is regarded in the commercial crime policy for commercial crime insurance purposes as being the insured's direct or the insured's own property, and therefore loss of that property is direct loss to the insured. The courts have held internationally for a very long time that, for example, funds in a bank, they are my funds, they're sitting in my account, but the bank holds them for me. That the loss of those funds, my funds, are the loss, is the bank's loss. And that is a direct financial loss. Often direct financial loss is confused with the defined event, which then says that the insured's loss, the loss to the insured, or the loss as defined, must arise directly from either the theft or the dishonesty and the fraud. And that direct is, according to, again, the majority of the courts globally, proximate cause. So it's loss proximately caused. Some people will say, indirect loss or consequential loss is not direct loss. Technically, yes, but if loss is proximately caused by the dishonest or fraudulent or thieving actions of an employee, then it falls within the defined event. Then the question is whether or not that loss is the insured's loss or loss for which the insured is responsible. In other words, is that loss a direct loss? So the two mustn't be confused.
Thanks, Lisa. I hope it answers Kamini's question. Moving on to the scenario number 3, which has to do with collusion, and this is quite important for the application of deductible. So in this scenario, insured's electronic equipment stock worth 11 million rand was stolen. Investigation together with the receiving clerk's admission confirmed that stock was dismissed through the receiving end. Evidence showed that the receiving manager as well as the dispatch manager worked together to prepare fraudulent document and also falsify the warehouse manager's signature. This is all in order to get the stock leaving the premises. In short, after this, immediately fires the two managers involved. With this example, Stephen, a question to you. This is a typical example of collusion. Under which circumstances have you come across whereby collusion was difficult to prove?
Okay, so very often in the warehousing environment, going back to the warehousing scenario, where there's unexplained losses. This is usually where we find it difficult to link employees to thefts and losses. It happens in a warehouse scenario, especially when the systems and procedures are I wouldn't say not existent, but not regulated and they're not enforced. Then you find that there's a lot of collusion between employees. And very often we find that when there's a huge theft gets reported and investigations take place, that there's not only one, but sometimes 2 or 3 different syndicates operating within the warehouse. Sometimes the syndicates may know of each other's activities, and sometimes not. Sometimes they're just operating independently. So, and on top of that, you have a pilferage situation because the processes within the warehouse is just not up to par and not up to standard. And obviously, in a situation like this, it's very difficult to prove the losses. Again, the whole investigation process comes into play then, interviewing, a stringent interviewing process. You very often find that there's collusion between the dispatch employees and drivers, which are obviously part of the transport process and the dispatch process. And there's a lot of collusion with, often happens with external parties as well as vendors. So it's very important we basically find in warehouse environments, it's more difficult to find, to link employees or to identify exactly how the losses are taking place. And there again, then the question of deductibles come into play. But I think in the warehousing environment, it's more difficult than anywhere else. An example that I can refer to is we had a stock loss, a livestock loss, where there was various avenues where the stock loss, the livestock loss was in the hundreds, so it was obviously ran into the millions as well. And basically, there was stock being pilfered from the community. It was in quite a poor community. Fences were being cut. On the other hand, there was an actual theft taking place, and it's very difficult to quantify these types of losses because you definitely know that there's a theft taking place, but it's happening from different areas, and you have to try and quantify that loss in the best way possible. In that scenario, we obviously through the investigation process, I remember we linked a internal appointed security guard that had a criminal record as long as his arm for stock theft. So that was obviously the next avenue of our investigation then. Well, that's where our investigation was focused. But in the warehousing environment, it sometimes becomes very tricky and problematic to confirm losses, especially when it comes to unexplained losses.
Thanks, Steve. Not sure if Alex, do you have maybe a question, maybe Billy?
Yeah, just Lisa. Our policy requires active collusion. Maybe can you just explain the difference between active and passive collusion for us?
Thanks, Alex. I don't really use the term active or passive collusion because collusion can be both. And okay, I'll get to what your policy requires. What is important is that collusion is a secret or illegal cooperation or agreement between parties to deceive others, to steal, to compete. And keep that in mind because that is important. In the policy, collusion is defined as any circumstance where 2 or more persons are concerned or implicated together and materially assist each other in committing an act which gives rise to a loss. Now, if I look at what, Alex, what you say, passive collusion, for me, passive collusion would probably be turning a blind eye because you're not actively involved in carrying sheep out of a farm or stock out of a warehouse or forging accounts, but you are turning a blind eye to those actions being done by others. The important thing in this policy and in the definition of collusion as it is in law is the material assistance. There needs to be an agreement between the employees. It's no good, if I go back to Stephen's first example about stock just going out or Stephen's current example about where stock is leaving a warehouse, but nobody really knows who's doing it. There are so many people that could potentially be involved, but one can't actually point a finger to any particular individual or particular group of persons who are actually committing the theft or the fraud. That kind of collusion is not going to fit well in the policy, and potentially in a scenario like that, the insurer will deny liability to indemnify the insured under the policy, because the insured is just incapable of proving that two or more people had an agreement, had a secret arrangement together to defraud or to steal or to dishonestly cause loss. And that is what is so important in relation to collusion. And the reason why it's important is because in the policy, you've got the unidentifiable employees extension. That gives the insured potential cover, even if the insured is unable to identify or designate a specific employee or employees who have actually caused the loss. But remember again, that extension is only there if the insured is still able to prove to the satisfaction of the insurer that the loss was actually due to theft, fraud, or dishonesty on the part of an employee acting alone or in collusion with others. So you've still got to have at least, I would think, one identifiable employee acting alone, or two or more identifiable employees acting in collusion, in agreement. Okay, you take the stock out the door and I'll pretend that I didn't see it, for there to then be cover for any other employees that you might not be able to identify, who arguably would have to have been involved for this loss to have been successful. So we understand that in a warehouse case, there are so many people involved, and the chances are you could probably have 10 people involved, but you just can't name all of them and you can't identify all of them. But as long as you can identify at least two that are actively colluding with each other, then you could probably get extended cover for the identifiable employees. And people, when I say probably and could be covered, please just understand that it is always subject to the terms and conclusions and exclusions and conditions of the policy. So we're talking hypothetically here. But yes, so to answer your question, Alex, active collusion is just the fact that there is an agreement, a silent, acknowledged agreement, conspiracy, collusion between two or more people to cause the loss. And
Thanks,
that's
Lisa.
the policy.
Thanks, Lisa. And obviously the relevance of that is it depends on how many, or depends on whether collusion can be proven or not. That will depend on how many deductibles will apply in terms of the claim. Stephen, just turning over to you again, I couldn't help but realize that the insured immediately pressed charges. Is this the right thing to do, or do you have any other suggestions?
Okay, Billy, so you definitely want to remove the employee or employees that are involved with the theft, fraud, or dishonesty, whatever it may be, out of the business. You don't want to alienate them immediately. Obviously, this is going to take place at some stage, but once they lawyer up, etc. But you want to suspend them so that you can possibly still interview them, and they don't necessarily have to agree to that. But very often, when it's fresh and the employee has just been, identified as the suspect, like you said in the beginning, it's very, in everyone's faces, and they basically that employee then can be interviewed properly. It sometimes happens that the insured don't take a confession from the employee. And this also has to, the insured, and we find that in many scenarios, a confession is obtained or an omission. But this whole scenario, taking confessions, is very controversial as well, because, you know, in a criminal setting, for instance, it has to be done under very stringent conditions. The person has to be taken before a magistrate. So it's very specific how a confession can be taken. And employee can come back and say he was intimidated, etc. So the interview process with employees is important, but you got to treat that very, be very careful how you treat that whole process. So yeah, to answer your question, as long as it's important to suspend the employee, but to obviously leave your avenues of investigation open so that you can still have a discussion with the employee, because once he has lawyered up, you're going to have to go through the lawyer, and it's much more difficult to get information that might be vital to your whole investigation process.
Thanks, Stephen. Staying with you, I think it's important that we leave the audience with some do's and don'ts, specifically with regards to risk management, underwriting, and at claim stage. Steve, what would you, given the fraud triangle, what would you give our insureds a few pointers on how should they manage their risk?
Okay, so if you look at the fraud triangle, obviously fraud usually takes place for various reasons. The employee might be in debt, might be a situation, very often that first few fraudulent transactions turns into a greed situation, and then the employee just carries on and it just escalates into millions of rands, as we find in a lot of our claims. The person might be involved in some illicit activities, and we often find that that the employee is busy with something that's not related to the fraud, but he needs to fund what he's doing. And obviously then it comes to life challenges, etc., economy. So the person might feel that he's forced to steal. The insured is very important to do a detailed screening process before an employee is appointed in any position, especially in the financial or the procurement departments. We're finding a lot more and more of our cases when we're doing background investigations is that the defaulting employee or the implicated employee has got various financial crime cases against their name. And then there's always, for fraud to take place, there's obviously the opportunity is there. So again, segregation of duties within any environment is vital. That segregation, and we find in very big companies, well-established companies, the segregation of duties just isn't there and isn't implemented, or it might be implemented, it might be there or written into the systems and procedures, but it's not been enforced. So the implementation, monitoring, and enforcement of all internal controls is vital. And obviously, then the employee will rationalize his activities by saying that they don't get paid enough, or as in maybe a warehouse scenario, he sees his colleagues around him pilfering or stealing, and just sees it's an easy opportunity to carry on stealing. And then in a financial situation, we often find that an employee within and sometimes very senior employees like managers and directors that start stealing small. The intention is to repay it back because they're in some kind of financial difficulty. And then if you look at that, the money flow, how it escalates over the months and years, it gets out of hand. And the employee actually, once you interview him afterwards, is very often happy that he got caught or thankful that he got caught, because he felt like he was in a situation that it was just escalating, and he knew I couldn't turn the clock back. So anyway, Yeah, the screening process is vital. The systems and procedures that must be, I believe there must be written systems and procedures, and not just not just training in the system. There must be a proper process that is followed, that where systems are implemented and then enforced and managed. I hope that answers your question, Willie.
Yes, thank you very much. Alex, you look like you have a question.
Lisa, just following up on Stephen's pointers, from the matters that you've dealt with and just your general observation, how can brokers help insurers in this regard?
Alex, brokers can help insureds because the brokers do or should know the terms of the commercial crime policy and the cover that it affords. They know their client's business and the risks faced by their client's business. So as the perfect knowledgeable person in between both the insurance cover and the client's business, they are best placed to advise their clients or help their clients become better insured risks. So, and that goes to risk management. So I just want to go, part of that is to go back to the previous, the scenario 3, where Stephen was talking about where Willie said that the employees had been fired, and Stephen was talking about suspending and firing employees. It's very important that insureds, in cases of commercial crime, in any event, but remembering in commercial crime, have disciplinary procedures in place and follow them. You cannot believe how helpful disciplinary inquiry records are to me, who may ultimately be appointed on the matter, to Stephen, who's appointed to investigate the matter, and to Willie, Sipa, Alex, who are handling the claims, and then to the insurer who's deciding whether or not the claim should be covered. Disciplinary records are of enormous value. Not only that, but it shows that the insured is actively doing business in accordance with its policies and procedures. And also, you can't fire people without putting them through a disciplinary process anyway. I'm no labor lawyer, but I at least know that. By way of an example, I had a claim where the insured did exactly the opposite. The insured suspected that there was a loss, and this is where brokers come in, how to help your clients. The insured suspected that there was a loss, suspected that employees had been involved, but couldn't really put their finger on it, couldn't really prove anything, didn't know whether or not to notify it under the policy. As Stephen said, it doesn't matter, just notify the insurer. Whatever the insurer decides to do with it at the end of the day, you've done your job, the insured's done its job. The insured then decided, well, I think that employees are stealing from me. But in order to prove that, I'm not going to fire the employees. I'm not going to suspend them. I'm not even going to let them know that they're under suspicion. I'm going to let them continue stealing so that I can then prove my case. It's a great idea. But the insurer then turns around and says, but hold on a second. After discovery of the theft, we don't cover you for any theft post that discovery. And the insured's argument was, I hadn't discovered anything. I suspected that there might have been employee involvement in the loss that we were suffering. I had no idea what it was. I needed to keep the door open so that the employees could literally fall into the hole that I'm now helping to make for them, so that I can then prove my case to I2, prove my loss, and receive indemnity under the policy. So just know that whilst a good idea sounds like a good idea at the time, it's not always a good idea from a point of cover. It might cause additional hurdles to be jumped over when you're trying to prove your claim and prove that it should be indemnified. So in that regard, brokers can also come in and assist. Then when I say you know the cover, you know the terms, and you know your client's business, and you know the risks, then you know that there's your client's duty to disclose all information material to the insurer's assessment of the risk. We all know how important that is. The difference in commercial crime is that most of the time, your insured, with your assistance, needs to complete a proposal form. And the proposal form in commercial crime instances asks very specific questions. And the reason for that is because commercial crime insurers need to know how many employees there are, your systems and your procedures, where your segregation of duties is, how you handle money, how you pay customers, how you secure your warehouse, where your CCTV cameras are situated. Those are all very important. But don't for 1 minute think that the insured's duty to disclose information that's material to the insurer is limited to that proposal form. For example, the proposal form probably won't say how much property does your insured client take responsibility for? For what funds is your insured client responsible? Because the insurer might not necessarily be thinking along those lines. If you know that your client operates bank accounts on behalf of third parties or holds property and looks after property belonging to third parties, disclose that. Because if you don't, the insurer has no idea that property or those funds are within the control of the insured. And if that property or those funds are ultimately lost through dishonesty of employees, you may have a problem and you may have to skip through many hoops to get the claim covered, if ever. So disclosure is important, and all relevant information, even outside of the proposal form, must be disclosed. Please don't limit your disclosure to the proposal form. And don't ever assume that the claim is covered. Don't tell your client that you think that the claim is covered, because whilst commercial crime is often seen as something quite simple and sort of, just it's a great to have, it's a must have in my view, it can become incredibly complicated and complex. And my message to brokers from a risk management point of view, assist your clients to become better insured risks, because as Willie rightly said, commercial crime is one of the national sports in South Africa, which means that commercial crime insurance is going to just keep becoming more and more expensive. The better risk your insured client is, the more negotiable the terms of that cover are going to be going forward. So the more systems your client has in place, the better its segregation of duties, the more CCTV cameras lying around, the better its procedures, its documents, its records, its step-by-step control of all processes, and then, of course, its disciplinary action and how it deals with loss afterwards. The better all of those processes, the better risk your insured will become, not necessarily immediately, but over time. And the better chances you and your clients have of proving claims under these policies. Alex, is there anything that I've left out?
Lisa, thank you. That, certainly, I think so. Just to reiterate, the better the systems and procedures, the easier it will be for the insureds to prove their loss. I think that's the bottom line message there. Sipho, you last but certainly not least, do you have a few pointers from a claims perspective that you wanted to leave the brokers with?
Definitely, Willie. It is so important. This sort of next do's and don'ts. I had to put my glasses on for this one. Discovery. It is important that the insureds are reminded what discovery means. For example, immediately when insured becomes aware of a circumstance that might lead to a claim, irrespective of the amount involved at the time, especially when the investigations have not yet been done. Notification, we need to be notified within 90 days after the insured has discovered a loss. Preservation of evidence has been alluded before by Stephen. There's, like, for example, the documents, evidence needs to be kept. Employees needs to be suspended rather than be dismissed immediately. 9 out of 10 times we get assisted by suspending employees, because I'm sure Stephen can comment on this as well, but it doesn't have to. In terms of investigation interviews, when the employees have been dismissed, they hardly provide information. When suspended, they definitely work assisting and providing information. Proving a loss as well within 12 months is absolutely crucial for us and the insured as well as the underwriters. And then recovery stage, it is important that all the necessary recovery steps are taken by the insured in terms of withholding all the necessary pension funds and salary, everything that's outstanding due to the insured. And it's also important that we are notified as soon as possible so that Stephen initiates the recovery whilst he starts investigating the claim. Yeah, that's about it from my side, really. I'm not sure if anyone has anything else or maybe.
Thank you, Sipho. That brings us to the conclusion of this presentation and discussion. I hope it was valuable. I do want to encourage everyone, if you want to bounce something off us, question, either mail or phone us. If we don't know, we will go to these experts that you've just listened to. So please feel free to contact us at any time. I just also want to reassure and reconfirm that we as I2 would always be prepared to provide a factual extract of the adjuster's reports. I think the basis of handling any claim is to agree on the facts. Once the facts is undisputed, it makes it so much easier to deal with all these contentious aspects that we've discussed now. Turning to the questions, I'm not sure, Tobe, how we are for time, but I think I may address one or two, and then we will address all the others in writing. So
you can carry on, Vili.
Okay, I see Reggie asked a question, must the insured prove that the employee gained financially? So improper financial gain is not a specific requirement in our policy. There are, however, a few exceptions with regards to that. So if it's extensions of credit or hire purchase agreements or loans or loan transactions, also if it's with regards to shares, equities and bonds, in those instances, we would require a personal financial gain or unequivocally intent for the insured to have suffered a loss. But in the normal course of claims, we don't have a specific requirement for the insured for the employee to have gained personally. Hopefully that answers your question. Just to revert to Carmen's question again, just to make sure we answer it properly, is there a difference between a commercial crime policy and an FG extension on a PI or GL policy? So in essence, there's no difference between a fidelity guarantee extension and the commercial crime policy. Normally, the extension is just limited in the sense that third-party computer fraud is not necessarily covered under those extensions, but essentially provides cover for theft or fraud by employees, as we discussed earlier. There's obviously under the PI policy, the employee dishonesty section, and as Lisa explained, that covers the insured for its legal liability towards third parties in the event of fraud and dishonesty of an employee. Let's see. Nadia, I'm sorry, your question is way too long. We will answer that in our write-up. So someone asked, Omri asked, will we send the presentation? We would certainly do, Omri. It was very short and succinct, but we will certainly be willing to send the presentation. And I see there's a few other questions. Shorai asked, it looks like employees will have to include credit checks on employees as part of the recruitment process in the risk management process. So yes, that is also one of the questions that we do ask in the proposal form, is do you do background checks from a criminal and from a financial nature? So it is important for obvious reasons that employees do background checks on the employees. So I think that brings us to the end. We will answer all the other questions, as I said, in writing. Thank you again for allowing us and giving us your precious time. All the best to the brokers in placing more risks. And we just want to emphasize that we at I2, we're here to find solutions from a cover and from a claims perspective. And we always give the insured the benefit of the doubt. Lastly, Lisa and Stephen, again, thank you very much. We appreciate your valued input. And I hand over to Tove.
Veli, thank you so much. Before you go, I just want to check with Cindy. Cindy, is there a question that you've got? I see you've had your hand up for a while. You can
unmute. Sorry.
Okay, perfect. No, we just don't want to leave you hanging there. Veli and team, thank you so much for a very informative session. Brokers and all attendees, thank you so much for joining us. We look forward to seeing you next week. For our next iTuesdays, we'll be speaking on medical malpractice claims. Thank you, everyone.